Yes, welcome to session 2 of SCMPE revision. We need to start discussing the concept of process innovation, business process and business process reengineering. Let me begin. Yes. Process innovation. What is the meaning? The meaning of process innovation is that you implement a new significantly improved production or delivery method, including significant changes in the technique, equipment, and or the software, if at all, if you're using. Now, what are the areas where you do process innovation? It can be in production, it can be in delivery, it can be in support system. So it need not always be in the factory. It need not always be for production activity. Process innovation. Understand the simple word, innovate, bring in something new. And it need not be restricted just to production. It can be even based on delivery system, based on support system. When a customer calls, the order to cash process, you are bringing in something new. The process innovation can happen even in customer delivery system. Order to cash process can also come under this. So process innovation is anything that you bring in new, need not be restricted to production. Changes or improvements increase on product or service capability done by addition in manufacturing or logical system. Change resulting purely from change in the prices, customization, regular seasonal and other cyclical changes, trading of new significantly improved product. This is not considered as innovation. You cannot say, look, my cost has come down because I'm buying a material from some other supplier. No, this is not innovation. Understand? Change resulting purely from change in the factor prices, customization. A customer comes and he says, I will buy this equipment from you. Suppose your company is into equipment manufacturing. He says, I will buy this equipment from you, but I want this spare part to be changed. I want this additional factor to be implemented. I want this particular part to be replaced with a better part. This is not innovation. Customization is not innovation at all. Yes. Now, then what is innovation? You need to bring in a new idea, a fresh idea, an improved technique, a better method of doing things. You are gaining advantage because customer asked for customization. You are getting advantage because there is reduction in cost because of the cyclical changes in the economy. That is not innovation. Yes. By the way, process re-engineering is different from innovation. Innovation is bringing something new. Re-engineering is changing the way things are currently happening. What is happening will happen, but how it is happening, you change it. That is re-engineering. Understand the difference. The word itself is re-engineering. That means something is already in progress. You are trying to change the way it is working. Innovation is something was not there. You brought in a new idea altogether. What is business process? A very simple definition. A business process consists of collection of activity that are linked together in a coordinated and sequential manner to achieve a specified goal objective. For example, they have given one example. Let me give you one simple example. Order to cash is a business process. What is order to cash? Customer makes a phone call or sends an email or raises a request on the website. Customer placing an order either by phone call or by email or by clicking a button on your company's website. That is the first step in the entire business process. That is called order. Once you take the order, you have to talk to production planning department and see whether we can deliver that product within the requirement of the customer. And then production planning department will then go to the plant or the factory unit and check availability of men, machine, material. And if material is not available, they check with warehouse department. They talk to purchase department, try to arrange it. If labor is not free, they'll try and see if we can get some temporary resource from outside. They do all this and then they come back to you and they give you an expected delivery date. You communicate that to customer. If customer is okay for all of this, then you take up the order. Once the order is confirmed, you execute the plan. Goods are ready, then goods are checked, goods are dispatched. goods are delivered to the final customer and cash is received from the final customer. This is order to cash process. This is a business process. In this business process, from taking the order till collecting cash, there may be a lot of non-value added activities. What you do in business process reengineering is you try to take off all non-value added activities. In the previous chapter also, that is lean system and innovation, also we discussed this value added and non-value added. In business process reengineering, see, this business process will continue to be there. You re-engineer, you change the way in which things are happening. See this, what is the meaning? Very important. Mark this important. I will share the entire PDF with you. Okay, not to worry. Business process reengineering is the fundamental rethinking and radical redesigning of the process to achieve a dramatic improvement in critical contemporary measures of performance such as cost, quality, service, and speed. All four terms extremely important: cost, quality, service, and speed. Cost should come down, quality you should make it better, service customer should be more happy than before, speed you should reduce the time necessary. The same order to cash, remember that example. If that customer makes a phone call today, by the time you do the entire process and collect cash from him, how many days are you taking as of now? If I take the example of Domino's Pizza, it is just 30 minutes. From the time I place the order, they accept the order, they make the product, delivery boy is assigned to me, and he comes to my house, he delivers the food, I make payment. This entire cycle is happening in 30 minutes. Can they remove any of these non-value added activities out of this whole cycle, from me placing an order on the mobile app till I make the payment to the delivery boy? Which are the non-value added activities? If they can remove, can they bring down that 30 minutes time to 25 minutes? This is called re-engineering. The process is already there. Process is already engineered. There is already a system. There is an app. Correct? Everybody is aware of this. It is nothing new. But out of all 5-6 steps that we are doing, from the time I place the order till the time I make the payment, in this, which is that activity that they can take out? I'll just give you one example. Domino's Pizza, those who use the app, Domino's app, not on Swiggy or Zomato. If you're using Domino's app, you might have noticed very recently they've added a new feature. What? Suppose now, today it is right now 7:15. I want to place an order, but not for now, for tomorrow evening at 7 o'clock. Normally, what used to happen all these years? Tomorrow evening, 7 o'clock, I open the mobile app and place the order. But now they have added this feature that you can place the order for future. That is, now itself, I can set a future order. I have to select the date, the time, and all the items that I want. And tomorrow evening, 7 p.m., whether mobile is with me or not, order will be placed automatically. It is more like setting an alarm. Order will be placed automatically, and then they take the order, they do the delivery. Once the delivery boy calls me and says, sir, I'm in front of your house, please open the door, that's when I have to do my job. That means by bringing in this one extra thing, they have ensured that customers are in a position to make the order whenever they want. Understand, in this example, I took this example after discussing BPR. This is not business process re-engineering. This is innovation. Why is it not re-engineering? Nothing has changed. The time has not changed. See this: cost, quality, service, and speed. Nothing has changed. Instead of placing the order tomorrow at 7 o'clock, I am just going to place the order now itself, today at 7 o'clock. That means this is innovation. This is process innovation. They have brought in new thing. When will I call it as business process re-engineering? Is I place the order at 7 o'clock. As of now, what is happening? They are assigning one delivery boy. If the delivery boy is busy, it may take 40 minutes, 50 minutes, sometimes even 1 hour. Can they bring in some system wherein even in peak hour, this 1 hour is reduced to just 25 minutes? Can they bring in a system more like what Mumbai Dabbawalas do, that they have 2 delivery boys, one delivery boy who will pick up the pizza from the pizza shop, and then he comes to a nearest location, and to that location, one more guy goes. He is more like a chain in between. He goes there and he picks up. Instead of every guy going to Domino's, is there a possibility they create a small hub in between, that is between my house and the pizza shop? If they can do it, then that becomes re-engineering. For re-engineering, for you to call it as process re-engineering, first of all, a process must be there and you make changes in the existing process. Understand the difference. Do not write same answer for every question. Not everything is process innovation. You have to ask this question: was this there before? If the answer is yes, and we have brought in changes in the way things are happening, this is re-engineering. And when you ask the question, was this step there before? If the answer is no, is this a new thing we have introduced? Yes, then this is process innovation. Lot of the times students write answer for BPR thinking that it's a BPR question. It is actually a process innovation question. Company can bring in both together, process innovation also, re-engineering also. Innovation is for new initiatives, re-engineering is for existing initiatives. So you have to read the question carefully. Do not write the answer just because you know more about BPR. It may be an innovation question and you write everything about BPR. That should not happen. Yeah. Concept: Porter's value chain is commonly used in BPR as a technique to identify and analyze processes that are strategic significance to the entity. Fundamental rethinking, radical and redesign, dramatic improvement, and process orientation. Purpose: why do you need BPR? This is a very important para for any theory question on BPR. You can write this. Number one, to improve key business processes like simplification, cost reduction, improved quality, enhanced satisfaction, operational excellence, competitive advantage. That is how to compete. See, pizza delivery can happen either on Domino's or on, say, Pizza Hut, another company. Why should a customer purchase pizza from Domino's? Why not on Pizza? Assuming, why not from Pizza Hut? Assuming taste is same, price is same, then where will you go? Now here comes the customer experience, something that most of us don't observe. When you read case study question, you have to observe this. Is this product a peculiar one? Is it done by this company only? Then they have an advantage. Nobody knows how to make that product. You have a competitive advantage. But if I am getting the same product from two different people, then how will I choose from where to buy? For example, I want to order food from a hotel. I can either go by Swiggy or I can use Zomato. Now, which one will I use? Sir, that depends on the hotel. Hotel is anyway same. Sir, that depends on the price. Assume price is also same. Sir, then that depends on who is going to give me early. That means now everything comes down to one thing: speed. Now, this is where re-engineering matters. Everything else is there. Placing the order, app is there, payment gateway is there, delivery boys are assigned. Zomato can give me food from that hotel in 30 minutes. Swiggy is going to take just 15 minutes. I'll go with Swiggy because everything else is same. Anyway, neither Swiggy nor Zomato is going to cook. It is the hotel guy who is cooking and he is anyway same. This is where the competitive advantage comes into picture. Next, stages. First, you have to identify the process. That's what I told you. Customer placing the order using the app and the whole cycle till customer pays cash to the delivery boy. This is the process. Second, process rationalization. This is B. Understand, out of 7 steps from the time I place the order on app, there are, say, 7 activities, 5 activities happening. Understand which are those activities in detail, segregate them into value added and non-value added. Third one, process redesign. See, is there another way in which this whole order to cash process can be done? Next one, process reassembly. It's not rep, it is reassembly. You just see, as of now, it is step 1, 2, 3, 4. Can you eliminate 2? Can you make it 1, 3, 4? Or can you eliminate 2 and 3 altogether? Can it be 1 to 4? Step 1, directly step 4. Is that possible? Try. This is called re-engineering. Next, some of the basic principles to be kept in mind while implementing any BPR program. And this is what you can write in any question related to BPR. Number 1, focus is on outcomes, not on the task. It is not what you do. It is what is the ultimate outcome of what you do. Understanding? It is not what you do. It is the ultimate outcome of what you do. So the focus is shifted not on task. The focus is on outcome. Okay, you are doing a hard work. Will customer be happy with this? Is customer getting benefited because of your hard work? Otherwise, it is still non-value added, though you're working hard. Single point data capture. One app, one place where you get everything. That is called single point data capture. Link the person performing the process to the result expected. Everybody should know what time the order was placed, what time the order was accepted, what time we started cooking, what time the item was ready, what time the delivery boy was assigned, what time delivery boy picked the item from hotel, what time he delivered, and when was it paid. Everybody should know everything, and everyone will be serious about it. So if they say order should be delivered in 30 minutes, that 30 minutes is for customer from the time he places the order to the time he receives goods, correct? But in between, there are 7 steps. Everybody should be given a target that you should complete the task in 7 minutes, 3 minutes, 5 minutes, 8 minutes, and so on. Next, integrate information with work process. Centralize the activity. Line parallel activities instead of integrating the result. Decision point is where the work is performed, but build the controls. You need to have a system where even the top management are in a position to understand the process, understand the flaw, and when you re-engineer, it should not be more complex than before. We have seen many places where earlier there was a process, lengthy, but it used to happen smooth, but time consuming. Now you want to make it very, very fast, but now we have complicated it. Very fast, but very complicated. That should not happen. You need to integrate the activities with the results. So 2 different things. Process innovation versus business process reengineering. PI seeks to implement, I told you already, new processes. In BPR, we try to amend the existing process. BPR doesn't talk about bringing new machine, new technology, new software, new license key. No, we don't need. We have everything. We just have to change the way we are doing things. Next, PI is more radical than BPR. Since it seeks to change an overall structure of an entity, BPR is streaming the process that are already in place. That means in BPR, it is difficult for you to identify the result because the process was already there. You only fixed some areas. In PI, you can show that, look, on 10th March, we implemented this new system. From 11th March, customers are more happy. Number of orders are more. Order values are more. Our sales are improving. Everything happened because of process innovation. In process innovation, because you're bringing a new thing, any positive thing happens or negative thing happens, you can attach that to your process innovation idea. But in BPR, you're not changing anything. You're not bringing anything new. Whatever was happening, it is only being modified. So you cannot say because of these modifications, look, our customers are more happy now. It is practically difficult to evaluate the effect of BPR, but it is always easy to evaluate the effect or impact of the process innovation because you have spent money, you have brought in something new. So there is a visible difference in the way things are happening in PI. That may not be the case in BPR. Yes. Next, let's move on to the next concept, just in time. One of the important concepts under lean system, just in time. As a concept, what it is. It's a system whose objective is to procure product or component as they're required by a customer or for use rather than for stock. In simple, the sentence says you will produce not to stock, but to sell. You will buy raw material not to stock, but to consume. That means the very objective of buying is not to keep as stock in godown, is to consume. The very purpose of producing is not to keep it in stock, but to sell. A pull system which responds to demand in contrast to push system in which stocks act as buffer between different elements of the system, such as purchasing, production, and sales. So what is a normal way of things in terms of inventory? You buy, keep the raw material in godown till you use. That may take 10 days, 15 days, 1 month. Okay, then order has come. Now you start the production. That means you kept material and then you were waiting for the order. In just in time, you will first receive the order and then you order the raw material for your warehouse. Understand the difference between pull system and push system. I produce FG and keep it in my showroom for the customer to come. He may come after 2 months. This is one way. The other way is I'll wait for the customer to come. I will take his requirement. I will take 1 day time from him. I'll say, sir, tomorrow evening we will deliver the goods, and then I go back and make. Now the production is happening because I know sure shot there is a sale. In my previous example, the purchase of raw material was happening because there was a sure shot consumption requirement. This is the difference between pull system and push system. JIT in production, in which is driven by the demand for finished product, whereby each component on a production line is produced only when needed for the next stage. So you will make it only when you know you can sell it. JIT in purchasing means purchasing system in which material purchased are contracted such that receipt and usage of the material coincide to the maximum possible extent. I am buying it on 3rd August and I'm going to consume it on 5th August itself. That means the time gap between purchase and consumption is very, very less. So JIT purchasing is about reducing the time gap between purchasing and consuming. JIT production tries to reduce the time gap between production of FG and sale of FG. You try to bridge the time gap as much as possible. Yes. Scope of JIT philosophy. To initiate processes that, number 1, reduces the amount of raw material inventory and improve the quality. Number 2, reduces the amount of WIP, also reduces the number of products that can be produced before defects are identified and fixed. It manages the variety of finished products, aligning production, sales, dispatch schedule in order to reduce finished goods inventory. One common thing in all the 3 points, you want to reduce the inventory. You want to reduce the inventory, whether it is raw material or WIP or FG. In raw material, what did they say? Do not buy too much of raw material and pile up in the go down. Number 1, you are blocking your working capital. Number 2, there is an opportunity cost. The same money can be invested elsewhere. Number 3, the more inventory you keep with you, higher is the risk. Higher the risk of theft, risk of loss, risk of obsolescence, risk of those items not being usable after a couple of months or days. And if there is a change in the customer preference, then this item may never be used. This is a bigger problem. Problem is not just about time. Problem is opportunity cost. Problem is working capital blockage. Problem is you have to take insurance if you keep too much of raw material in your go down. All of that becomes your overhead cost unnecessarily if you buy too much and keep it with you. So just in time, when you read, it looks like it's only about bridging the time gap. Tuesday you want to consume, Monday you purchase. It looks like it is only about managing the time. It is not just managing the time. There are many advantages we will discuss. After the supporting accounting system, alter the supporting accounting system. Example, payment of material on a consolidated basis per month instead of multiple payments for every small lot. Elimination of paperwork by making payment to supplier based on internally generated document entities production as per its record into standard material consumption. So JIT doesn't talk only about time. It even says, why are you making payments to the supplier every time you purchase? 5th October you bought something, 9th October you are buying something, 25th October again you are buying. So you're buying it 3 times. You don't have to make payment 3 times. You can either have one common fixed amount paid on monthly basis, and once in 6 months you can reconcile how much was the payment made versus how much is the invoice value, and then make the adjustment. Either you pay to the supplier if it is shortage, or let supplier supply the next set of goods to adjust if you have already paid excess. So just in time even talks about avoiding or eliminating all those activities which are not adding any value. 3rd October you purchase goods, you make payment on 5th. Again 10th October you buy, 12th you make the payment. 25th you buy, 27th you're making the payment. What is the need? Why don't you streamline even the payment process to the supplier? Let it be once in a month, maybe beginning of the month itself or end of the month. You sign a contract with them. You keep a standing order in the bank every month end on 31st or on the last day of the month. 25,000 rupee will go from your account to supplier account. So there will be unstopped supply. He will not be waiting for your payment. You will not be waiting for his invoice to come. You know anyway you're going to buy goods from him. Sometimes maybe 5 times in a month, sometimes maybe only once in a month, maybe some months high demand 21 times in the same month. So instead of making payment to every order, every purchase that you make, you can make the payment either on standing order basis, or instead of waiting for his invoice, the second point B, you avoid waiting time for the invoice to come to you. You know how much is purchased in your warehouse. You have the internal document, goods receipt note, GRN. Based on the GRN itself, you can make an approximate amount of payment. Let the invoice come 2 days, 5 days late, also no problem. After that, you pass the purchase entry. If there is a difference, you can always adjust in the next invoice. Basically, what it says, eliminate unnecessary paperwork, eliminate unnecessary phone calls and emails and follow-ups, and eliminate all repeated activities. Instead of paying on 5th for the 3rd invoice and on 10th for the 8th invoice, why don't you club all the invoice once in a month, make a single payment? This will reduce lot of non-value added work. That too, if you're writing a check and sending it by post, why should you send a post 5 times a month when you can actually have a standing order where fixed amount goes to the customer, to the supplier? Even this is part of just in time. Here, our focus is to entirely rethink about the way inventory processes are happening. Yes, just in time in FG. Standardization of finished product, identification of sales and production capability, finalizing the dispatch schedule, simplifying the cycle, finalizing the schedule. This is production schedule, this is dispatch schedule. These are 2 different things. JIT stores requisition. Simple points, nothing much to explain. JIT in raw material, additional points, standardization of material, make or buy decision. We will discuss these things again later. Standardization in supplier list, streamlining purchase process, firm contract, supplier assistance, information system, logistics, and JIT ordering. Quite simple. I don't see any requirement to explain in detail here. JIT in WIP, piling up of WIP inventory, delayed tracing of defective, ways to resolve is Kanban card, that is working cells. We have discussed this in the regular class. Kanban card, I have given a detailed example as well. So let me move on. JIT, objective benefit. Mark these 2 important. Any question on JIT, you can cover these points. Again, they will not ask you a straight question on JIT short notes. They will write a big story, give a case study, saying that a company is planning to implement JIT. Please explain what are the objectives, why should they implement JIT, what is JIT in material purchase, what is JIT in WIP and FG. Prepare a detailed note that needs to be presented to the management. They have no idea what is JIT. You explain everything in detail. That time you have to cover both objectives and benefits. Waste reduction, time reduction, elimination of non-value added activity. Zero inventory. Again, zero inventory, though we say theoretically it is correct, but practically it is not that easy to have a zero inventory system. You will still keep some safety stock, but you can write it in notebook easily. This is not the reality. Zero defect, zero breakdown. Breakdown here means machine breakdown. Economic batch size, product quality, timely delivery of customer. Now, what is economical batch size? Look, you have a customer with whom you have signed a contract. You will be supplying 12 lakh units in 1 full year. That customer. Now, contract is non-cancelable and he has already made the payment of full 1 year money to you. Now, 12 lakh units are to be supplied to him in 1 year. You can produce all 12 lakh in a single batch and deliver to him. But he says, boss, I don't want all 12 lakh in one shot. 12 lakh is for the whole year. I want 1 lakh on monthly basis. Every month, 10th of the month, you dispatch 1 lakh to me. And this is how I want it to be. I don't want entire 12 lakh in one shot. Now, what is the challenge in front of you? Even if you produce entire 12 lakh in a single batch, you can't dispatch all of that. you will have to dispatch only 1 lakh, 1 lakh, 1 lakh, and so on. That means the last 1 lakh will go 11 months from today. That means if you produce all 12 lakh, you will be unnecessarily piling up the stock. And that's where we're coming back to JIT. If you produce all 12 lakh in one shot, you'll be keeping the stock for next 11 months with you. This is not good practice. So then what to do? Should we produce 1 lakh every month? Anyway, 10th we are going to dispatch. Let's start the production on 7th. 7th and 8th, we can do the production. 9th, it will be ready for dispatch. 10th, we can dispatch. 1 lakh, 1 lakh, 1 lakh. If you do that, you will have to produce 12 times in a year. Correct? Now, 12 times you have to produce, that means 12 times you have to set up the machine for this production. Set up the machine is assemble the parts, do the trial run, heating up of the machine, all of this. This is called machine setup cost. You might remember this was something called EBQ in CA intermediate, economic batch quantity, not EOQ. EOQ is for raw material. EBQ is for batch size. How many units should I produce? If I produce too many units in a single batch, I need to set up the batch only once or twice in a year. But then I'll be keeping so much of FG inventory with me, which is not correct as per JIT. On the other side, if I decide to produce very less quantity, then I will have to produce so many batches. Now, so many batches will result in increased setup cost. Every time you have to set up the machine, every time you have to do trial run, every time you have to allow the machine for heating up. Say, suppose if machine heating up takes 15-20 minutes, in a year you have to do this 12 times. And during that time, employee salary is paid, but he is waiting. And you have to do trial run for say 15-20 minutes. In trial run, if you get good units, fantastic. Otherwise, you will have to again reset up the machine. All of this you will have to do 12 times in a year. This also involves cost. There is a salary that you are paying. There are, minimum expenses that are necessary for setting up. Power consumption happens during setup. You may create more wastages, defective items during trial run. All of this you will have to do 12 times. Now you have a question in front of you whether to produce more so that our batch setup cost comes down, but on the other side, our carrying cost of inventory will go up. On the other side, produce less quantity. Here, your carrying cost will be very less because you won't be carrying too much of stock with you. You will produce and immediately dispatch, but then in that case, you will end up spending high amount on setup cost. So this is the same thing that we studied in CA intermediate called economic batch quantity, and that's what they're saying here, economical batch size. Don't overproduce, don't underproduce, follow EBQ. If you remember, the formula for EBQ was square root of 2AS by C. A is annual FG requirement, S is setup cost every time you set up the machine, C is carrying cost per unit per annum. Yes. Now, the benefits of JIT. Number one, most of the points are obvious. Reduction in inventory level, reduction in waste of time, scrap rate, and overhead cost. What is this reduction in overhead cost? Just now I told you. You will have to set up the machine every time. If you're buying frequently the raw material, every time you have to pay for unloading charges. Correct? Instead, if you buy 10 lakh kgs in one shot, you have to unload only once. You have to pay toll charges only once. You have to pay lorry charges only once. Parcel, container, everything is paid only once. But if you buy in less quantity and if you keep buying, because that is what JIT says, look at the contradiction. You buy too much in one shot, you save a lot of ordering related cost, but then you will pile up the inventory. On the other side, JIT says buy only when you know you're going to consume. That means you'll have to buy small quantity, but you have to do it repeatedly. But then that will increase your ordering cost. Every time you have to pay toll charges, every time transportation, container, loading, unloading, transit insurance, so many things, paperwork, admin, all of this has to be paid every time. So you have to find out a good balance between buying more or buying less. JIT, time reduction, many varieties of time reduction here. Number one, storage time, you will not keep it with you for long. Inspection time, once you sign a contract with a definite supplier, you don't have to spend time on inspecting it every time. You can do it randomly once or twice, but you don't have to do it every time. But if you keep changing your supplier all the time, then you'll have to inspect every time you receive goods. Handling time, that is once you unload before you start producing that activity. Last one is queue time. This is mainly related to WAP and FG. If there are 4 machines, A, B, C, D, and the 4th machine is slow, then C, B, and A should also work in that speed of D. Otherwise, A, B, C will produce too much. All of that will come and sit in front of machine D, and machine D is slow. This is where Kanban card system works. How will JIT impact on overhead cost? Through reduction in overhead cost, shift between overhead cost and direct cost due to introduction of machine cells, scientific allocation, and common overheads based on machine cells and cost drivers. Cost driver and machine cell, this will come in activity-based costing. We will discuss that in some time. Other impact of JIT: lower inventory and associated cost, better pricing. Better pricing because you're not unnecessarily spending on anything. And when you don't unnecessarily spend, you will not unnecessarily charge your customer. Basically, more than better product pricing, I will call it as lower product pricing, because when you eliminate blockage of inventory, correct, a lot of expenses will automatically come down. If warehouse size is reduced, understand so much of rent is reduced. If you keep too much of stock with you, you will have to have so many people in the warehouse. That many people's salary you can avoid. There are 7 people in warehouse because warehouse is big. Warehouse is big because you have to keep so much stock with you. If you shift to JIT, warehouse size can come down. That means so much of rent is reduced, so much of electricity bill, cleaning, maintenance, building insurance reduced. Insurance of stock will come down because you're keeping very less stock with you. There were 7 people earlier. Now you can run the warehouse with just 2 people. 5 employees salary cost came down. So there are so many other effects as well. Reduced capital requirement. How do you measure whether your JIT implementation has been successful or not? You can use inventory turnover, setup time reduction, customer complaints, scrap, quality, service, and ideas generated. Inventory turnover is basically the speed of movement of inventory. Inventory turnover ratio is equal to cost of goods sold by average inventory. Yeah, the higher the number you get here, that indicates that there is a faster movement of inventory, and that is exactly what is JIT, faster movement of inventory. High inventory turnover ratio is a good sign. Yes, let's move on to the next chapter, performance measurement. So far, whatever I have discussed is from lean system and innovation. Because JIT is an important part of the topic, I decided to discuss JIT in detail. Otherwise, it's part of the same topic. So now that our first important topic is done, lean system and innovation, I'm going to next important topic, that is performance measurement. First necessary thing, if you want to implement performance measurement system in your company, is to assign responsibility to every department. And you don't call them as department 1, 2, 3, you call them as responsibility centers. And every responsibility center is given a particular responsibility. Not everyone is given a sales target. That is not the correct way. I'll explain now. See this. Activity center of a business organization entrusted with a special task. That's what I told you. Specific responsibility. Unit of function of a business organization headed by an executive responsible for its performance. There are 4 types of responsibility centers: cost, revenue, profit, and investment. Let me explain. First one, cost center. What is cost center? There are a couple of departments in the company. Department means responsibility center. There are a couple of responsibility centers in the company where you measure their performance. Understand our chapter name. You measure their performance based on target cost and actual cost. Their target is to reduce the cost. Their target is to control the cost. Their performance is measured based on how much they spend. Are we expecting any revenue generation from them? No. Are they talking to customer? Are we expecting good business coming because of them? No. What are they doing? They only spend money. They are our cost centers. Second one, revenue centers. These are the departments. Their responsibility is to generate more revenue to the organization. At the end of the year, you will measure their performance by comparing their target revenue with actual revenue. Here you can cover sales, marketing, advertisement, product development, all of this. Third one, profit centers. Here you create within your organization, you create certain independent entities, more like setting up a branch, and appoint a branch manager, and that person is given full authority to take every decision, starting from procuring raw material to hiring people to buying machine to giving training to talking to customer and even fixing the price. That means at the end of the year, you will only ask that branch manager one question: how much was the target profit? How much is your actual profit? That you do either by reducing the cost or increasing the revenue. We will not involve in your day-to-day affairs. Your target is to show us so much profit. Last one is investment center. There are certain departments in the company where they spend money not for immediate benefits but for long-term benefits, like R&D unit, training and development center. In an R&D unit, when a company is spending money, that is not called as cost center. There at the end of the year, they will not say how much was our budgeted cost in research and development, how much is actual cost in research and development. And they don't say, oh, look, we are spending too much money on research, we should stop doing research development. They will never say that, because they know the objective of setting up that is not to measure the performance by the cost. They will definitely not generate any revenue. So when there is no revenue, you can't expect them to show profit also. We are investing money in training our employees, spending money, investing money on making a better product. There are not yes, sorry, I think there was a small network issue. Let's move on. Now, how to easily remember these four responsibility centers: cost, revenue, profit, and investment. Let's take the example of government. In government, those departments where government is just spending money, it's a cost center. Say you are giving a particular subsidy to particular section of people in the society. It's a cost center. Second, revenue center. You have income tax department, you have custom department, you have GST department. What is the target to the GST department? To collect maximum taxes to the government. There, those departments, the target is to generate revenue. Third, profit centers. You have created a lot of companies like Gas Authority of India, Steel Authority of India, ONGC, Indian Oil Corporation, LIC, SBI. You have set up these companies and you have appointed directors. There are shareholders. They're almost like independent entity, though government has a lot of shares in that. The decision making is not under government control. That means at the end of the year, government will only ask, dear IRCTC, how much profit did you generate? Because you took every decision, you are free to do so. We have institutionalized yourself, so you are free to take any decision. At the end of the year, we want to know how much is the profit that you have generated. Last one is investment center, where government spends money on R&D. Here you can see an example, Indian Institute of Science as an example, where government spends crores of money for research and development. We will not measure the performance of ISRO based on how much was targeted cost, why did they spend 2 crore extra, correct? That is not the purpose. Understand, many students get confused between cost center and investment center. In both places we spend, but in cost center, we know that I'm spending and I'm not going to get anything back in future from this. But in investment center, when I'm spending money, I know this will help me in long run. So there is a clear difference between the two. In cost center, I pay, I know I won't get back anything, and I have to continue to pay, just like me paying house rent. It's a cost, correct? It's not an investment. But if I put that money in mutual fund, I know that I'm not spending there, I'm investing, because in future there is a return. When I pay rent in future, what is the return? I leave the house, the rent will never come back. Now, once you create responsibility centers, the next thing is to do responsibility accounting. What is responsibility accounting? ensure that you have a MIS system, you have a system within the organization where every responsibility center, their cost, their revenue, their targets, their actuals, everything is in one place. You should have a dashboard where you should know these are the cost centers, this was the target, this is the actual, this is the variance, this is where standard costing comes into picture, and then you dig into the details to find out what went wrong, how should we fix it. You have to do it responsibility center wise, and this is called responsibility accounting. I've already explained. I'm quickly reading it. It says, first, control system of management, accounting and reporting involves the creation of centers. Standard of performance are defined. Furnishing the performance report on periodical basis, can be monthly, quarterly or annually. Actuals are compared with the standard to identify deviation and initiate the action. Just now I explained all of this. Prerequisites. Number one, area of responsibility and authority of each responsibility center, clear set of goals, report format, and items which may require management's attention. If you want to bring in responsibility accounting in your organization, you need to have all of this. You should be ready to bifurcate the company into multiple departments, set clear goals to all of them, create a performance report which is accepted by all of them, because at the end of the month or quarter, you will measure their performance based on this report. So the report format should also be discussed with the heads of every responsibility center, and some actions are to be done by management, not by responsibility center head. Even that needs to be defined clearly. If this is done, then you can do responsibility accounting in your company. Some limitations: difficulty in preparing the chart, because there are a lot of companies where it is very difficult to identify these centers, because there is an employee who is working with 2 cost centers, 1 revenue center and 3 profit centers. All of this comes under one company. Now it is very difficult to identify how to apportion his salary, whether he is part of cost center or responsive or profit center. He is working everywhere. It is very difficult. If your organization chart is so complex, implementing responsibility accounting system is very, very difficult. Where is it easy? Where you are hiring a person only for a specific task. Even if he is jobless, he will just come and sit in the factory. He will not work in other departments. If this is clearly defined, then you can be sure of the data that is available. If the same guy is working in 5 departments, same product is used by 3 departments, same machine is used by everybody in the company, then you cannot have responsibility accounting system. There can be conflict of individual interest with organizational interest. This will come. There is something called ROI versus RI, return on investment versus residual income. Very soon we will go there. You will understand the conflict between individual and institution, that is organization. Passive resistance to the reporting system. Many times you may start with good objective, but the head of the responsibility center is aware that at the end of the month, you will measure his performance based on one single Excel sheet. Correct? Therefore, they will be little hesitant to accept any of these new kind of system in the company. If you say that we will track your performance, some of them will resist. They say, sir, it is not possible for me to prove as per your Excel sheet. I am doing my work, but if that is not fitting your criteria, I'm sorry. Because they believe that they have been working in this company from so many years. You cannot now come with a new format, a new Excel sheet and say, whatever you have done is over. From next month, your payment, your bonus, your incentive depends on how you perform as per our matrix. That may not be accepted by everybody. New employees, it is easy, but existing employees, bringing them into this new system is always difficult. Responsibility budgeting, here also same thing. If you want to do responsibility accounting, first set the budget, then only you can compare that with the actual basic data. So I'll go to the next part. Now, how do you measure the performance? Performance measurement process. Identify vision, mission, and objective of the entity. Define the strategy to achieve the vision, mission, and objective. Quite simple. Link the strategy with, very important, critical success factors, CSF, for various financial and non-financial perspective. And that is our syllabus, financial and non-financial. This ROI, RI comes in financial. Identify appropriate performance measure key performance indicators for each success factor, measure the actual outcome and compare that with predetermined or defined standards, analyze and implement suitable action. Linking the critical success factor, what exactly it is. Objective that business is trying to achieve as an entity, as department, or as strategic business unit. What is our critical success factor? Customers should be happy. This is my critical success factor. I'll go back to my example I took almost half an hour ago. Domino's, for them, the critical success factor is customer should be happy with our service. Now, how do you define this customer being happy? Customer will be happy with good discounts. Customer will be happy with new coupon codes. Customer will be happy with faster delivery. Customer will be happy with good taste, correct? These are key performance indicator. Your success factor is customer should be happy. For that, the indicator is how many times he is getting the order before 30 minutes of placing the order. How many times he has given 5 stars for the quality of the product. How many times he has given 5 stars for the delivery within time. So these are the performance indicator. Success factor is customer satisfaction. Measurement can be done using KPIs, that is set of measures and associated target that will result in successful completion of a critical success factor. Then you identified that, look, in my company, suppose Domino's example, all customers are happy with the price, with the discount offers, with the taste and everything, but many customers are giving us bad rating because of delay in delivery. Now the success factor was to deliver on time, correct? But when you measured it, you realized 30 minutes we promised them, but we are always taking 35, 40, 42, 43. Then you find out of 100 orders, how many times we have delivered in time, how many times we are late. Then you realized out of 100 orders, more than 73 times we are late. Another 30 times we are on time, not 30, okay, 20 times we are on time, and another 7 times only we are in time. Now you know that next month, the most important KPI that you will measure is whether we are able to deliver within 30 minutes or not. As of now, 73% we are late. Next, this should come down. This is called KPI. You need a matrix to measure the performance. And delivery time within 30 minutes is your KPI. Next, focus. Here you talk about what is to be done. I told you customer should be happy. For that, what is to be done? Delivery system should be good, correct? How to measure it? That is here. KPI represent how factors. So there it is what, and here it is how. Next one, critical success factor. Guys, everywhere it is not CFS, it is CSFM. Sorry for that. Yeah. Here, everything is tied to entity's overall strategy and derived from the strategic goal. One of the goals of Domino's is to have happy customers. That means customer satisfaction has come from the main objective. Here, it is linked to a it is linked to a critical success factor. That means KPI is based on CSF, and every CSF is based on the primary objective, the main strategic goal. CSF seek to go deeper into the high-level goals and lay them out as a list categorized objective that will collectively drive. But here, to operationalize the CSF into achievable elements called targets or threshold, KPI should be specific, measurable, achievable, relevant, and time constrained. In short, remember it as SMART. This point is important. Any KPI that you should set, KPI is delivery within 30 minutes. Number one, it should be specific. What specific here? Delivery should be done within what? Measurable, 30 minutes, achievable. Don't keep an unreasonable target that we should try and deliver within 10 minutes or 12 minutes. When you know it is not going to happen, don't set that in the KPI itself. Relevant, check whether by doing this, our customers are really going to be happy. Sometimes in a hurry to go early, you may deliver a half-baked pizza, customers won't be happy. You are trying to fix one problem, you are creating another problem. And time constraint, ensure that if you are not able to do it in January month, by February, by March, by April, how are we going to improve? You cannot have KPI being achieved in the same month in which you implement, but you should also have a clear timeline. Okay, January, 73% of our orders are late. February, we should bring it to 65%. March, it should be 50%. By next 6 months, I want to bring it down below 20%. Only less than 20% of my orders can be delayed by more than 30 days. All other 80% should be either on time or in time. So it should be number 1, specific, number 2, measurable, number 3, achievable, relevant, and it should have a time frame. It should have a timeline clearly mentioned. Yes. Factors. How do you set the critical success factors? Depends on industry structure, competition, environmental factors. KPI targets are ascertained using the factor like industry analysis. How many minutes are other food delivery companies are taking? Compare that with mine. There is Swiggy, there is Zomato, there is another XYZ. There are 10 companies. Mine is 11th. All of them have an average delivery time of 21 minutes, 22 minutes. Why only I am taking 35 minutes? That means KPI is set based on industry analysis and also internal analysis. How do you review it? It is to be reviewed and evaluated with respect to companies' high-level strategy goals. That means CSF will be decided at the top management level. Here, it is governed by feedback and monitoring process to achieve the critical success factors and goals. How do you review KPIs? You will see, now take the report again, out of 100, how many orders are in time. Now call those customers, check randomly. You can call any 10 customers of Domino's and ask them, are you happy with the service now? Some of them will open up and say, yes, 6 months back, I used to get the orders very, very late, but nowadays it is improving. That means there is a way in which you can review whether your KPI analysis is correct or not. You can call any random 10 customers who always order. Just find out who are those people who keep ordering on Domino's very frequently. Yeah, and review their report. 6 months back when they ordered, they got after 40 minutes. 5 months back, 3 months back, 2 months back, and today they're getting the orders within 21 minutes. That means here is a way you can review your KPI analysis. Yes, for all of this, you need to capture the data properly. That's it. Linkage. Definitely CSF and KPIs are connected. KPI must be selected and designed so as to ensure that the CSF is delivered if the KPI meets the threshold, and CFS in turn must be constructed to ensure that the company's strategic vision is delivered if the CSFs are met. Simple. Objective, CSF and KPI together represent a chain of links. Objective, you want to give best pizza in the country. CSF, for that customer should be happy. KPI, you will measure it by the time. Time is not the only one. I am explaining with time as an example. Quality of the pizza is also one of the KPIs. How many people are happy with the quality? That is why if you order any food on Swiggy or Zomato, after placing the order, once you get the food and you make the payment, they will ask you to rate for 2 things. 1, quality of the food. 2, your satisfaction with the delivery. Sometimes some of these apps even have packaging, pricing. So they will try to get the data. Most of us, we just skip, we don't give, or we just give 555 or 00 and close the tab. But if we properly give correct information, it will actually help the businesses. This is their KPI. You might have seen in Uber or Ola, once you complete your journey, they will ask you to rate. That is the KPI of the driver. And if you have any complaint, there's a list of complaints. You can select that. Once in a month, they sit and analyze the performance of each driver. Out of 100 people who used your cab in this month, 80 of them have ticked that you do rash driving, you skip signal. Now that is the KPI. 80 out of 100 being unhappy for these reasons. What was the CSF? Those who book cab, Ola and Uber, they should get a safe ride. And how to measure safe ride? Whether people are complaining about you skipping the signal and you driving very rash. And you can see 80 out of 100 customers who used Ola and Uber in this particular vehicle, this driver has so many complaints. Success factor is the safety of passenger. Key performance indicator is how many people have rated negatively for speed, overspeed, and skipping the signals. So this is how CSF and KPI works. Now that we have understood how to identify responsibility center, what are the types of responsibility centers, and how to identify success factors and have the KPI, next thing is to measure the performances, merits and demerits. And good performance measure, it should have all the complete data, pervasive, that is not bits and pieces, comprehensive, goal congruent, responsibility oriented objectivity, and there should be a clarity. What are the advantages, merits of having divisional performance measurement? It develops agreed measures of activity, helps in setting the targets, lead to greater understanding of the process, clarification of the entity's objective, promoters accountability, better comparison between the division. All these are good things, right? Why should you have your company divided into multiple divisions? Why do you call it as cost center 1, cost center 2? You want to have a better control. You need to have a micro view, micro understanding of everything happening. You need to create an atmosphere of competition where every responsibility center is trying to prove that it is better than all other responsibility centers. These are the advantages, but it creates some problem. Number one, undue focus on measurement. Now that every responsibility center head knows that he should be successful as per your Excel sheet matrix KPI, he will try and focus only on that. He will not do anything other than what is there on the Excel sheet, because they know their performance is not measured by anything other than what is not there in the Excel sheet. So in Excel sheet, there are 7 KPIs. His objective will be only to meet those 7. Other things, he is not even bothered. Second, focus on one measurement to the detriment of the others. Just now I told you, you are trying to deliver pizza well in time. Speed, you tick the box, but then the quality of the pizza is not good because it was not big. Now that finally for a customer who is paying money and purchasing your pizza, it should be both good quality and timely delivered. Correct? It cannot be that you try to tick one box and you spoil the other. More emphasis on short-term measures. This is what happens in Swiggy, in Domino's, in Zomato. We all have this complaint. Just to meet that 30 minutes, these guys skip all the signals and they ride very rash. Now, what is their explanation? Sir, in the KPI, they will measure. End of the month, they will not listen to me whether I was riding rash or slow, whether I was driving responsibly, etc., etc. All that they ask is, out of 100 deliveries, how many times I have delivered within 30 minutes. So objective becomes very narrow, very short term, very dangerous also. Misinterpreting the data reported. It may so happen that you could not capture the data properly. That can create a problem. Misrepresentation of data to suit specific purposes. I told you. Suppose if you give a target to the purchase manager that the purchase price should come down, he may buy substandard quality material and then he say, look, as per my matrix, my standard purchase cost was 12 rupee. I have bought this item for 11 rupee. I have saved money. I have met the KPI requirement. That means he's just trying to suit everything that, he's trying to do whatever suits him, but he knows that he is buying substandard or bad quality item, but he won't reveal, because his performance measurement is not based on the quality of the product. It is simply based on the price. This is where the goal congruence problem comes into picture. You are looking at your individual target and you are not bothered about company's overall target. Using out of date measures, tendency towards being rigid, conventional, and unimaginative. Yes. Types of performance measures. First, financial, and then non-financial. First one is financial, ROI, RI, and economic value added. This part of the chapter is practical in nature. Everybody I want you to solve minimum one problem on ROI, one on RI, and one on EVA. And there are a couple of questions where they have covered both ROI and RI in a single question, because ROI will only talk about individual departments' performance. And we have done these kind of problems in the class also, where one department will be okay to do a project only if it is helping that department. It will not think of the company as a whole, goal congruence. But in residual income, this problem is resolved. You will not look at only your profits, you will look at the overall business profits. Therefore, there is one very good question in the study material, and we have done this in the class, where they have compared ROI versus RI. Ensure that you solve one sum where they compare ROI and RI. So one sum to be done on each category, ROI, RI, and EVA, and you should do one sum where they have a comparison. Yes. Next, moving on to non-financial. First one is triple bottom line: people, planet, and profit. By looking at these three terms, easy to remember also, three P's: people, planet, and profit. Now, when you say people, you talk about your employee satisfaction. You talk about society, people around your factory. You talk about general learning and development, the training that you provide to your staff, because it should not so happen that only company is making profit, but employees haven't learned anything. Employees have not been trained. Employee safety is not considered. This is not good. So this is about the people part. Second, planet. You ensure that the company takes care of its environmental responsibilities. We have a detailed discussion on environmental management accounting. We will do it little later. The third one is profit. After taking care of people and the planet, obviously you have to take care of your shareholders. For that, you have to achieve good profits. Second one is performance pyramid, another non-financial performance measurement technique. Here, it links the business strategy with day-to-day operations as under number one, level 1 top, level 2 business, level 3 operating, and level 4 department. So here you have a pyramid, correct? Top is where the vision and mission and the strategies are set. Second, the goals are identified. Third, plans are made. Fourth, activities are implemented. Your organization structure should be in this manner. Yeah, we will discuss little later in the budget chapter, top-down approach and bottom-up approach, right? So when you see pyramid, obviously understand the meaning of the pyramid. At the top, only less people should be there. Little down, few more people, and then lot more people. And at the bottom, you have the maximum number of people. Now, the maximum number of people are those who are working with the machine, correct? Department level employees. Each of these levels should be given their own responsibilities. The top level, the next level, the next level, and the bottommost level. Pyramid, easy to understand. 4 layers, correct. One is strategy, second is business, third is operating, fourth is departmental levels. Next one is performance prism. It aims to manage the performance of an entity from 5 interrelated facts: stakeholder satisfaction, stakeholder contribution, strategy, process, and capabilities. I have in fact shared a detailed diagram with all of you on this performance prism. I have shared a theory handbook, and those who are not part of our regular batch, I will be sharing even that with all of you, those who are watching this video. Not to worry. Building block model. Again, it focuses on 3 aspects: standards, rewards, and dimension. Standard is the goal, the target. Reward is how you ensure that people are rewarded for meeting those standards. Dimensions are the different perspectives of looking at these things. Balanced scorecard, because it is important, I am going to explain this in detail. So only balanced scorecard is discussed here in detail. What is balanced scorecard? It has both financial and non-financial measures related to companies' critical success factors. Objective is to provide a framework for measuring their performances. There are 4 perspectives, very, very important. And I want all of you to do at least one case study, minimum one case study on balanced scorecard. Extremely important. Please make a note somewhere. One day before exam, one case study on balanced scorecard must be revised by you. Customer perspective, internal perspective, innovation, and financial perspective. Advantage, it is a more holistic approach because it combines both financial and non-financial. Overall agenda, it is not looking at things in bits and pieces, it looks everything in totality, objectivity and feedback and learning. Disadvantage, some of these are non-financial, need for trade-off, that means there will be conflicting interest, objectives and subjective measures, non-consideration of IT and R&D, and performance evaluation. Yes, process of creating balanced scorecard. Important, you can use this in every answer that you write related to balanced scorecard. First, you have to identify what is the firm's vision. That is the top level strategy. Second one is strategy. Third, define, as I told you, to be #1 pizza company, that is your vision, correct? To become #1, what you should do, that is your strategy. Now, in terms of critical success factors, what exactly is that you have to do to achieve those strategies and goals, and then identify the measurement, KPI, evaluation of scorecard, end of month, end of quarter, you have to evaluate this and create an action plan. In case you are not able to achieve the set targets, you need to have detailed action plans to fix that, follow up and manage. Don't just prepare a scorecard and write everything there and keep it. Understand, once in a month, you need to have a review meeting to understand in detail where are we going wrong. Strategy mapping, it allows the entities to describe and communicate their strategies, serves as a basic document for development of financial and non-financial BSc. Last one, links and aligns the organizational and individual targets and initiatives with defined mission and desired strategic outcomes. Before I continue to benchmarking, there is one question in May 2022 RTP. In May 2022 from Lean System and Innovation, not May 22, November 22, I'm sorry. Yes, November 22 RTP. From Lean System and Innovation, surprisingly, we don't have even a single question. I don't know why is this happening. From performance measurement, there is a question number 11, B Steels Limited problem. I'll be just sharing that screen and we will discuss, because balanced scorecard by default is one of the important things. Just give me 1 minute. I'll be opening that screen for you. Just a minute. Yeah. Here it is. Yes. Let me share the screen. Yes, I hope you are able to see. Yeah, can I quickly get a reply? Can you see the RTP screen? Yeah, perfect. So here it is, the RTP. In this, I am going to the specific question. Just a second. Yeah, we will discuss all these questions in this video, not to worry. As of now, today's relevant question, I'm just opening it. Here we are. Yeah, balanced scorecard. Those who have attended my class, we have actually discussed the same question in the class in case study. We have covered this. Yeah. Anyway, let's revise here. B Steel is a leading manufacturer of flat and long products and have state-of-the-art plant. These plants manufacture value-added products covering entire steel value chain, right from coal mining to manufacturing pig iron, billet, HR coil, black pipe, GI pipe, cable taps, etc. The rock-solid foundation combined with non-stop upgradation and innovation has enabled B Steels to surpass its goals constantly. That means so far everything is good in the organization, right? Its vision and values for sustainable growth is balancing economic prosperity and social equality while caring for the planet. That means they covered all three factors of triple bottom line. Profits, you can see that, while caring for the planet, they covered planet, and then they said balancing economic prosperity and social equality. That means they even covered people. Yeah, these are the hints. When you read the question, you have to think this way. It is preparing its balanced scorecard for the year 2021-22. It has identified following specific objectives for the 4 perspectives. Just now I discussed 4 perspectives. They have given the list. Then B Steels has collected key performance indicators to measure progress towards achieving these objectives. The KPIs and corresponding data collected for the year is given. I'll just read out 1 or 2 to make you understand. Average replacement time, number of days. That means if you sell goods and then there is a complaint, from the time we receive the complaint till we replace that item, how many days are we taking? The goal was to reach this in 2 days. Actually, we are doing it within 1.5 days. That means we have achieved. Yeah. Gross margin 15%. We have achieved 16%. Good. Number of customers 15,000. Now we have 15,600. Number of plant accident were 0, but actually the goal was 0. But actually we have had 2 such accidents and so on. So they have given a detailed list. Next. For preparation of balanced scorecard report, the following format has been developed. According to me, they should not give this table to students because now this is ready to eat question. Because you have financial, customer, internal business, learning and growth. These are the 4 perspectives. And if that is already printed in the question, now a student's job is to just identify whether this item comes under financial objective or customer objective. In exam, this may not be given. Be prepared. You should know the 4 perspectives. Okay, if they do not give this table, you should prepare this table. Here what they have done, they have given already B Steel balanced scorecard, 4 perspective, objective. That means you just have to identify. I'll just scroll up. You had these 3, 3, 2, total 8 items. You just have to write these 8 items in the correct box, whether something is a financial perspective item or customer or internal business or learning and growth. Be careful. This table, this is almost, ready to eat type of question. This table may not come in exam. You should know the 4 items and you should know this format. Objective, KPI, goal and actual, whether it is achieved or not. Now they're asking you question number 1. Prepare a balanced scorecard report using the above mentioned format. So format is already given. Place objective under the appropriate perspective. We know, select a correct KPI from the list of KPIs that would be appropriate to measure. I'll just give you one example. Say financial perspective. Now go up here. Which is the correct financial perspective? One example, increase gross margin. This is a pure financial perspective. That means here in the table, under the financial perspective, first objective is to increase the gross margin. And what is the KPI? Sir, they have already given gross margin percentage. Correct? You write that. And then goal 15%, actual 16%, goal achieved. Answer is yes. That means first question, according to me, is not a question. Or if you consider it as a question, understand half of the answer is also printed in the question itself. Yeah. Second is a good question. See this. B Steel's desire to integrate sustainability and corporate social responsibility related KPIs in their balanced scorecard to adhere to their vision and values. Advise B Steel's using triple bottom line framework. I covered this when I was explaining the question. Correct? People, planet, and profit. They are saying, look, we already have a balanced scorecard. And in fact, in sub question 1, you prepared that, you completed that balanced scorecard, well and good. Now we also want to have triple bottom line. Now identify, go back to the same 8 items, identify which falls under people category, which under planet category, and which under profit category. So here they clubbed 2 things, triple bottom line as well as balanced scorecard. Here is an important thing for every student to observe. You can't pick and choose the concepts and go to exam hall. If you don't know triple bottom line also, you can't answer this. If you don't know balanced scorecard also, you can't answer this. First question is BSc. Second question is triple bottom line. These 2 topics, lean system and innovation, performance measurement. I think I've told you so many times in my regular class also. I'm repeating it once again. If you call me one day before exam also, I will ask about only these two topics. These two are extremely important topics. Do not leave even a single question, single example when it comes to these two. From whichever source, if you can get questions on lean system innovation, performance measurement, do it. Environmental management is also one important, but that is relatively easy to answer compared to this, because you know by default in environmental, in the next session we will discuss that. In environmental management accounting, you will always have companies which are planning to avoid following the rules and regulations, or they're going to violate some of the permission and other legal requirements. You know how the question is going to be framed in environmental accounting. It is important but easy. Lean system innovation and performance measurement, this is not very easy. Some of these terms are new to you. Yesterday, in the previous part of our discussion, 5S, just in time, Kaizen costing. You never know, they can combine Kaizen costing, just in time, and give one question. So do not ignore anything in these two topics. Study material, RTP, old question paper from all sources. Your priority is these two. This is actually a very easy question. And if this comes for 10 marks, 5 marks for this BSc and 5 marks for connecting BSc to triple bottom line, can't be an easier question than this. Yeah, I'll just scroll down to show you the answer. Question number 11 was here. After watching this video, you can just go through here. Look at this. What they did, prepared a balance scorecard. Financial, this was my first example. Increase gross margin, KPI GP, 15%, 16%. Answer is yes. So simply they've copied everything from the first and second table. And third table, the answer table format was also printed. And then they said triple bottom line. In the first paragraph, they've explained what is triple bottom line. In second paragraph, they have written everything about profit, people, and planet. And then they have connected their answers, the first answer with the second one. You can go through this after the class. After this video, you can go through this answer. Very easy, but you should know triple bottom line means profit, people, and planet. If you know this, then only you can expand the answer. If you don't have idea of those three, then you won't be able to answer, though the question is very easy. Yeah, so this was the question from RTP on performance measurement and evaluation. Yes, let's go to the next concept, a small one, benchmarking. What is benchmarking? Name itself is making it very clear. Process of identifying and learning from the best practice anywhere in the world. So we are into automobile spare part manufacturing. Find out which is the #1 automobile spare part manufacturer in the world. Learn from them. Their plant design, their production technique, their labor training. I know not every information will be available to you, but you can do some research, read about their articles, watch the videos, go to that factory, visit them, and if they give permission, do a complete tour, understand, and then come back, try to implement. Just because they show you everything how they do, don't think that you can come here and copy and beat them in the competition. It's not that easy. They have spent years together to become #1. No doubt they will not show you everything. Even if they show you everything, you can't come back and copy that easily. So benchmarking is not copying somebody, learning from somebody, trying to improve whatever we are doing. They have achieved 99% accuracy in production. We are at 85%. Just by going to their factory, you can't come back and next month your 85 will not become 99. Your 85 can become 86 if you learn good things. But you should again innovate, again come with your own ideas to make that 86 to 88 and 88 to 98. Types: competitive benchmarking, strategic, global, process, functional, internal, external, within the group, within the industry. What are the stages? Important for a theory question. First, you need to plan. What should we benchmark? Second, collection of data and information. Okay, whom should we benchmark? Which is that company? Collect the information. Analyze the finding. Okay, this is what we have understood from the best practice. Analyze what is that we can do, and then formulate and implement the recommendation. Okay, now from the learning, we have decided that these will be the changes in our factory from the coming week. and then constantly monitor and review. Very important prerequisite, you should have commitment, clarity, enough scope, resource, skill, communication, and also capital. Yeah, you want to copy somebody, that means then you need to have that much of money also to have the same infrastructure. Difficulties, time consuming, obviously you can't copy, I already told you. Lack of management support, you may not get. They may say verbally, but they may not support you with the required resources. Resistance from employees whenever you bring in a new system. Obviously, people who are already in the system will come back to you with 100 reasons why they can't achieve. Paper goals, most of this will just be in paper, difficult to implement. Copy paste attitude. Some companies, as I told you, they believe that, okay, we will go there, we will copy everything and implement it. It is not that easy. Benchmarking is not copy pasting. It is learning from someone who is better than you and you improving based on your past performance. Don't try to become number one when you are number 235 in the world. Correct? From 235, can you become 234? From there only you can come to 233. From them slowly someday you can come to number one. It is not copying from someone and trying to redo. It is not easy also. Many companies visit some big factories, learn from there, try to implement. 2 months they try, it's not giving them good result, they stop. This is not good benchmarking. For benchmarking, prerequisites, see the first one, commitment. You need to have commitment. They should write even patience, commitment and patience, because benchmarking is not easy. Code of conduct, principle of legality, principle of exchange, confidentiality, use, first party, third party contract, and principle of preparation. You should not go there and leak their confidential information, try to get the data in illegal manner. That is not benchmarking. You should not talk and convince the important staff there to leave that job and come here. That is not why you are going there. You've gone there to understand what is their system. You need to have these basic ethics. That is why they said code of conduct, basic manners, not to share the information with competitors. You may not copy in your factory, but you can share to number 2. If that is number 1, you can share it to number 2 and number 3. Even that you should not do. This basic discipline you should have. Only then somebody will allow you to visit their factory. Otherwise they will not. Okay. Yes. Chalo, with this, let's wind up this session. We will continue again in session 3. We will be doing revision of new topics. Yes. See you in session 3.